All right, welcome everybody. Thanks for joining us today for this pre-summit Q&A here with Ross. We're really looking forward to the event next week, and appreciate you all being ticket holders and getting access to all the benefits of the summit. During the summit, we're also going to have live video networking, so you're going to get access to a online event software essentially that you can, everyone else who's watching the first day for free is going to watch on YouTube, and you're going to watch on the inside of this software that will give you access to all 3 days, and you'll also be able to do virtual networking there. So they have virtual tables that you can kind of do video chats like this with people and meet new people, make new connections. So it's really exciting. So I'm happy to have Ross here, our esteemed host of the summit. Really looking forward. If you guys have questions, get them ready and throw them in the chat. We'll address them like that, and then we'll create an open conversation. But to start, maybe Ross, just kind of introduce yourself, and some people may not be familiar with you or your background. Just tell us a little bit about yourself and go from there.
Yeah, awesome. Well, thank you all for joining us this evening. For those that haven't met, I am Ross Tomkins. I'm a physiotherapist by background, so not from a corporate background at all. And I guess I would describe myself as the typical accidental business owner. I started my business because I wanted to help people. And I think the reason I share that is because a lot of the companies that you're going to be talking to will have a founder who's very similar. They didn't necessarily start it with a lot of logic. They didn't start it because they were an accountant and great with numbers. They started it because they wanted to fix a problem, and they wanted to, help people. So I think it's really important when you're talking to business owners not to go into too hard, too quick on the financials, because we forget that a lot of the terminology is like a different language. So if you go in too quickly with what's your EBITDA, what's your net profit, what are the forecasts for the next 5 years, I think you can put them on the back foot. So I guess I went a little bit further ahead there, but who I am, an accidental business owner. Many people out there are like that. And I think it's important to bear that in mind when we're having conversations.
Awesome, Ross. Yeah, appreciate that. And can you kind of share? I know we've talked about this before in previous videos that we've done together, but can you kind of share your trajectory of how everything happened with going from physiotherapist to acquisition entrepreneur?
Yeah, definitely. So I always tell people that I've had two epiphanies in my life. So I've trained as a physiotherapist. The first epiphany was when I was going on courses and learning about how to help someone's sporting hip or their sporting knee injury. And I had this realization that most of my patients didn't actually play sport a lot, but they all went to work every day. So I started an occupational health and ergonomics business so I could help people at work. Because in my head, I thought if I can help people of working age, I can help more people. Now, quite quickly after, that was followed by the second epiphany, which was I could be the most amazing occupational health ergonomist in the world, but if nobody knew how to find me, how on earth was my business going to grow? And that led me into the world of marketing. And I left all of my medical training behind and I started investing a lot of time in learning about marketing. And our business grew. That logically then left or led on to the world of M&A. And what actually happened is we grew our first business through joint ventures, strategic partnerships, marketing, up to just short of 2 million in revenues. And then we lost our biggest client, who was Amazon. And I had this desire never to be so reliant on one client again. And to do that, I had this idea of acquiring different companies and creating an ecosystem of interdependent health companies. That was 7 years ago when I did my first training with Jeremy Harbour and Carl Allen on the same weekend, which is another story, funny one perhaps for later. And that set me on this path. Now, the first 2 years didn't really do anything. I looked at a lot of businesses. I valued them and I procrastinated and I got in my own way and I didn't make a lot of offers because I think deep down inside I was probably worried I was going to offend them because my offer was too low or I'd done something wrong. So it took me 2 years to do the first deal, but then after we did that one, and I kind of got out of my own way, things have accelerated from there. So this year we should close 6 deals alone, and every year it compounds. So we're getting bigger and busier and doing more each time. And some of that is with our own verticals. So we now own a medical supplies and pharmaceuticals business. We own a medical device company. We have a men's health company. We have a domiciliary care vertical. We have a health and safety vertical. We have about to go live a recruitment business. And we also have an interest in an HVAC company. So those businesses are going to continue to grow. And also, we've got some really interesting joint ventures. So we've got a mobility company that we're acquiring up in Scotland. That should go through hopefully in April. We've got a business that we're buying manufacturers. It's still in the healthcare space in America, which I'm actually joint venturing with Carl Allen. And we're looking at a couple of other joint ventures as well, where we're each bringing different expertise to the table. So myself and Mark, who you heard talk earlier, we've got a conversation going on tomorrow about something that fits neatly into both his sector, which is marketing, and ours, which is healthcare. So our trajectory has definitely compounded and just continues to go up over the last 7 years.
Awesome. Yeah. Always love to hear that story and all the how far you've come and all the progress that you've made. It's great.
Well, you've
Um,
heard the story a few times now.
yeah. So cool. Before we dive into just questions and conversation here, it's been a few months since our last summit. We had our last summit in July last year, and we've got the next one coming up this week. Maybe just talk about what you're excited and looking forward to at this summit, and what you hope people will get out of it.
Obviously, the speakers, last year was great. I think this year we've got an even bigger lineup. Some people who have done some incredible things in business, growing 50, 75, 100 million businesses, successfully exiting. We've got people bringing a different slant on it as well in terms of wealth preservation, and also people talking about how to run the businesses as well. So how to choose your management team, how to get the most out of them,
Hi.
because hello, uh, because I'm sure you've heard people say before the easy bit about M&A is acquiring a business. The hardest thing comes after. It's when you're integrating it, bringing it into your existing portfolio and growing it. So to have speakers as well that are going to be talking about that side of things, I think is a real plus.
Yeah, that's great. Yeah, really excited. Hey, Cal, good to see you. So yeah, let's open it up to questions. If you guys have them, the best way to do it probably be drop it in the Zoom chat here, just so we can kind of organize a little easier. But for starters, if anyone wants to jump in right away, go ahead and we'll get started.
Don't everybody talk all at once.
Well, hi, it's Owen.
Hi, Owen.
Hello, Ross. Hello, Michael.
Uh,
For me, it's a quick question just in general about the summit itself, the times, because I would like to organize my agenda and knowing if it's going to be European time, I hope, not American times. So what is going to be able to organize my agenda and everything else that's going on running around in my life?
yeah, so keep an eye on your inbox today. We plan to release the day-to-day schedule today. It's probably going to be somewhere around 10 a.m. New York time. So I think that's about 2 or 3 in the UK, something like that.
Yeah, we've got sort of 50-50 split with people in America and people in the UK. So obviously we've got to try and cater for people on the west coast of America as well as people in England. So we settled on the East Coast as kind of achievable for most people.
Okay, thank you.
Sure thing. Tina has a question. Tina, would you like to unmute yourself?
Sure. Yes, I was just wondering, Ross, if we're going to be touching on WIBOs during the summit, is there going to be anything about that, or just pure kind of M&A deals?
No, yeah, definitely WIBOs as well. So I think Stephen Kuhn will probably touch on that in his talk. Chris Moore will be touching on that, I suspect, as well. And I'll talk about some of my own experiences as well. So the deal that we have going through at the moment, it's got just finished finalizing DD, should go through in the next couple of weeks, is a nice WIBO. So it's a recruitment company. I've known them a while. Took them 13 years to get to 3 million. And then, sorry, a WIBO is a work-in buyout, or some people call it consulting for equity. So it's where you're swapping your expertise, your knowledge, your relationships for equity in a company. So no money down. So this is a recruitment company, 13 years to get to 3 million. The owner then just came to me and said, I'm fed up. I'm tired. Will you buy it? And when I chatted to him, what came out was he didn't really want to sell it. He was just lonely. He needed help. So actually, I said, what if I come on board as your partner? I'll sit on the board. I'll give you advice and help you with your growth. And I will be your acquisition partner. So we'll go out and acquire businesses together. So it's taken 6 months, but we've done our first deal and he's doubled in size. So it took 13 years to go to 3 million. In 6 months, he's gone to 6 million. The plan is to go to 25 over the next 3 years and then exit. So that's a WIBO strategy or a consultant for equity. And we should have lots more examples over the course of the summit.
Great, thank you.
All right, Arjun has a question. Arjun, I think that's how you pronounce it, right? You want to unmute yourself, talk? Okay, I don't think he's unmuting himself, but his question is, where do you go about sourcing or looking for businesses to acquire?
So they're kind of everywhere. There's a part of your brain called the reticular activator. The reticular activator, I'm sure you'll have come across, and the perfect example of this is when you're going to buy a new car and you decide you're going to buy a red whatever it is, and all of a sudden you see red cars everywhere. They were always there, but your brain sort of screened them out before. As soon as you attune yourself to looking for opportunities and looking for businesses, it's incredible where these opportunities arise. And they're literally everywhere. You could have a conversation in a shop where someone goes, oh, getting tired, can't believe, I've got no one to hand this business on to. And in the past, you'd have gone, oh, yeah, that's a real shame, and walked out. But now you'll go, oh, really? How much do you want? Let's have a coffee. So they really are literally everywhere. But some classic places, you're going to find them, one on broker sites. I'm not averse to that. I think there is a way in which you can use them quite well. A really good place is LinkedIn. If you haven't already, go for their top tier Sales Navigator, which is an absolutely fantastic tool for honing in on clients, having the first conversation before you take them off onto a different platform. And try and get the deal over the line. There's other ways, such as Googling, the industry you're looking at. Most companies will be part of a regulatory body or a trade union, so you can get big lists of your target audience. You can refine that by the size of the company and then send them letters, either to their office or preferably to the director's home address, so it makes more impact, as it's a bit of a pattern interrupt to get a letter nowadays. We're all bombarded with emails, but a letter actually to your home address is a bit different. So lots and lots of ways. There's just 3 of them there. But once you open your eyes, there's literally opportunities everywhere.
Awesome. Martin's got a question. Do you want to talk, Martin?
Sure, sounds good. So I'm looking at an acquisition right now where the operating business owns the real estate as well. And so, as such, I mean, they have a small mortgage on the building still. Therefore, the cost for real estate, of course, is quite low. But if I now acquire the business, either purchase the real estate, now there'll be pretty significant mortgage payments on there, or if I were to lease it from the seller, the leasing amount is not that much lower from mortgage payments. So it has a massive impact on the profitability, of course, of the business, and therefore also the value I see versus the value that the seller is looking at right now. There's a big gap between profitability, right? So have you had that experience, or do you have advice on how to deal with that?
Yeah, so it shouldn't actually cause a problem because you can point out that if they're not paying themselves rent now, they should be. So their profit will be artificially high if they haven't been paying the going rate for rent. But of course, any business or most businesses you would expect have to pay rent. So regardless of whether you take a mortgage out or whether you do a property split, and get a property investor in to buy the property and you lease it from them, there is rent to pay. So you would adjust that on your adjusted EBITDA.
One thought that I'm having, because they have a mortgage for about a quarter of the property. So one thing I'm thinking is to just assume that mortgage and perhaps even make a deal with them there where we initially own, a quarter basically off the property, lease it or for a discounted leasing rate for the next little while until we buy out the property over the next few years or a few years later as well. That's kind of what I'm thinking to do as well.
Yeah, absolutely. Is that in Germany?
In almost Vancouver in Canada.
Oh, Canada. Someone put up Germany in there a moment ago. I don't know what the law is like in Canada, but in the UK, if you try and put a commercial lien, a mortgage on a commercial property on day one, you have to put in the deposit. So you'd have to put in 30 or 40%. But there is a part of English law where if you have rented the property for over 12 months, you can then put a mortgage on without a deposit. So you could then you could then get that 60% from an external funder, from a mortgage provider, and then give them that then. Or, of course, there is nothing wrong with doing that lease approach where you just pay it off over time if they're open to that.
Okay, I'll have a look at that if that's the case here. I have no idea. But thanks for that, Ross.
No problem. And of course, your other option is a property split where you would bring in an investor, a property investor, and all they do is they go and buy properties, and then that creates the big day one payment, so the seller is happy, and then you enter into a lease with the property owner, so you get the business, even though the day one payment comes from the property, and then you defer the payments of the business over time.
Yeah. I like that too. Okay. Thank you, sir.
No problem.
Thanks, Martin. Okay, we have Anthony with a question. And is it? Yeah, Anthony. Yeah, if you'd like to unmute yourself, you can ask it.
Yeah, greetings. Hi guys. I'm a newbie to buying business, but I have lead generation experiences and experience in joint ventures. I wanted to know what sort of deal structure would I put in place for someone who's got an experience with buying businesses whilst I'm learning how to buy business.
Yeah, that's a really, really good question. This comes up quite a lot. Very, very frequently. To create a win-win, you've got to think about value. So that there has to be a fair exchange of value going both ways. So I get approached from time to time with someone who is new, like yourself, and they'll say, can I joint venture with you? I go, okay, what do you need me to do? And they'll say, well, I'll find the company, but then I want you to use your, background to help negotiate it. And then, your financing to finance it and your team to run it. And I'm like, okay, so I'll negotiate it, I'll fund it and I'll run it. And what do you want? And they say, oh, well, 50-50 is fair. And Like, well, I don't think it is fair because you found it. I could find them by myself, and I'm taking all the risk. I'm funding it, I'm running it, I'm negotiating it. So you can see how that necessarily isn't a 50-50 deal. It could be you know, if you source them, you could negotiate a 10% equity or a 15 or 20. I guess it depends on what else you're going to do afterwards. So are you going to work in the business? Are you going to help them with marketing and that sort of thing? Well, there's definitely there are some people out there who are great at doing the negotiation, but they're not very good at lead gen. You know, so the perfect person for you is to find someone that's rubbish at finding businesses, but they're brilliant at negotiating. So you could have a really good partnership with them.
Okay, thank you. So, would all deals be on an equity basis, or do they pay you? Is it referral fees, or is it all equity based?
It depends what you want. You know, there is definitely both. There are some people out there that just do deal wholesaling, which is a bit like property sourcing for people. So you could go out, find businesses, and then if the deal closes, you would get a fee. So, you know, typically in the sort of corporate finance world, it would be between 1% and 3% of the enterprise value. So whatever it's sold for, depending on how big the number is, you get between 1% and 3%. That's fairly typical in the corporate finance world.
Okay, thank you. Thank you.
And of course, it's not an either or. You could do both. You know, if you're really good at negotiating, you could say, I want the closing fee and I want some equity.
Okay, brilliant. Thank you.
Anybody else?
Ross, I've got one while while we're waiting for some more questions to come in here. I know one of your favorite topics is how to build rapport and relationships in the deal making process. Can you share some of your insights there?
Yeah, I think it is the most important part of the M&A journey when we're dealing with, you know, small to medium-sized businesses. I would go as far to say that no small business has ever been sold without rapport. Bigger businesses probably different, you know, it's all taken care by the auditors and the corporate finance people. But at the smaller end, if you're looking at businesses maybe up to 10 million, then in revenues, I think the most important thing is rapport. Because if you put yourself in the seller's shoes, you're not going to sell your company to someone you don't like. You're not going to sell the company to someone you don't trust. You're not going to sell the company to someone that you think is going to asset strip the company, sack all the staff, you know, the staff that you watched their kids grow up and put them through university and paid for their holidays. Like, these are the things that really matter to small business owners. Their staff are like family. So trust and rapport, I would say, is the most important thing. And indeed, 4 of the businesses that we've acquired, we weren't the highest bidder. So it wasn't money that was the driver. In fact, I saw an article recently that they'd done a lot of questionnaires on people that had sold their business, and 80% of the reason why people sold were not financially related. So it was they were looking after the legacy, they weren't changing the name, and these sorts of things were actually the driver. So 4 of our businesses, we weren't the highest offer, but we were seen as the safest pair of hands. And that, of course, comes down to rapport, communication, how much trust is there in the relationship. So yeah, I'm a big fan. Rapport is not just important, it is the most important part. On that subject, just to add to that, actually recently, I met someone and they openly said, I'm terrible at building rapport. They were an accountant. They loved numbers. He was like, I can add so much value to a company. This is again a great example of a joint venture. He was like, I can add so much value. I can improve the profit margins. I can drive growth, but I don't really like people. I don't want to build rapport. I'm not very good at it. So my advice to him was to go out and find someone who is an excellent communicator, who can get the deals over the line. And in that situation, that could easily be a 50-50 scenario, because he's got all of the financial acumen then to run the company, to improve the bottom line, to help it grow, to help with due diligence, to help with further acquisitions. He just wasn't very good at talking to people.
Awesome. Thanks, Ross. We have another one. Okay, so Christian, if you'd like, you can unmute yourself. Christian's got a question about doing his first deal in potentially the construction industry.
Yeah, so I've been like researching this with M&A for some time, and I think it's time to also start doing some things. In the last few years, I've been pretty good in B2B client acquisition. So I have the deal making, let's say, I think I can do the deal, but I don't really have like experience in the construction industry. Right now, I acquire clients for Google partner. My question would be, what would you recommend to someone who is getting started but does not have the experience of running a business, one, and does not have the expertise? My plan is to find and partner with someone as an advisor, like an industry expert. That's my plan, and I will do the work and I will do the deal and I will find the financiers and everything and seller and things like that. But I would also want to know your opinion.
Yeah, I mean, you don't have to be able to run the business. I'm genuinely not a very good business owner. I'm great at building rapport and motivating people and inspiring our teams, but I get bored with the day-to-day running of things. So I don't run any of our companies. We've just got amazing teams. And some of them have equity, my joint venture partners, of course. But a lot of them are employed. So we just employ fantastic people. And many years ago, I had that realization that I had to start employing people better than me. So we have people far cleverer than me and far better in certain things, but they just can't do what I do. So I am able to just do these, great things and plan the strategy and acquire companies, and you just employ someone. So you could employ someone to do that running. A couple of things I would say though is, firstly, why construction?
In Romania, I did some research on the industries that I would say that have the best potential. Also, Romania, it's pretty interesting market. So, for example, right now in Romania, the rent is lower than if you would pay the monthly interest to the bank. So it's very Romania I think it has some of the biggest ownership of houses in the world. So, and also a lot of the industry and the government, a lot of employees are in construction and construction related. So this, I think it would be like an industry that is not going to fall, because the government is it's incentivized not to let it fall. Also, for example, I have experience in tech. So I work for this Google partner, is one of the biggest in CE. But the idea is that from what I've seen in tech, you're not going to be like finding those types of owners that have no succession plan like you would find in construction, for example, because in construction it's not sexy. So most likely they will not have that much succession plan. But in tech, for example, a lot of the companies are newer. Google partners for sure is not, I don't think I would find someone who's old, because I think they created Google partners in 2000 something. So for sure, it's not someone who's old enough or something like that. So the reason is more practical. I also want long term to be able to do this in more industries. So I want to not be attached to an industry. But I did some research. I also started doing some courses. I learned about it. I started reading about it, and I also like this industry, the construction industry. I think it's, to be honest, these people are like constructing the world. We should be very grateful for them, and in a way, we're also like saving these businesses, because if we are not buying them, they will die off. That's the truth. In a lot of cases, they don't have to whom to sell them, and it will be like very hard for them. So we are saving some businesses, saving like the legacy. So also feel really good about it. The only thing that is not, I don't think I could run it, because I think it's very, very experience and knowledge based, and I don't see myself running it. I was thinking like my plan was, okay, I would have an advisor. I would have myself that I would take care of like doing the deals, maybe finding people, doing all of those, what is needed. I will have like seller financing. So the seller would be like giving a lot of, having a lot of incentives. So we have that. And we will have also a general manager. So I'm pretty sure that it should work. But yeah, sorry, I don't. This is to hear your point of view, not what I want to do. So yeah.
That was really, really good. And there's some really powerful motivators in there as well, which is great. We talk a lot about, what will we do after we acquire a business, and M&A, further bolt-ons is an incredible way to grow. But two other ways you can scale companies are with strategic partnerships, and also tender opportunities. So the fact that in Romania you said that there's a lot of government-backed schemes, which means there'll be tenders that you can win for that work, or bid writing, I think sometimes it's called. That's pretty powerful, because in the UK it isn't so much like that, and it's very difficult to borrow or lend money to buy a construction company, because in the UK everyone's expecting that the housing market is going to crash. It's a very volatile market, the construction industry. So even large companies here are struggling to borrow money to acquire construction companies. But the difference, as you said, in Romania is this actually sounds like something similar to subsidized or backed by the government. So that would be a really good business to go into. Having all of your expertise, your advisors and your operators will definitely be key. But I would say, you don't have to know how to build a house or build a warehouse, because you're going to be the person in charge of strategy and growing the company. I've got no idea how we manufacture microscopes, but it happens. So that's okay. One thing that you might want to consider is it's much easier to build rapport when you have a connection to the industry. So whether there's, some angle that you can go in at, so maybe it would be introducing tech to the more old-fashioned construction industry. That could be a way where you elevate your status, and then people are like, oh right, this could be exciting. Yeah, I could see how the business will grow with you at the helm, because we're introducing this new stuff. Because I think you're absolutely right. Most tech companies are newer, they're not baby boomers. They're not in their 60s or 70s and wanting to retire. They are probably in their 30s, 40s, or even 20s. So it's harder to do a creative deal with them. But I think that might be a way you can leverage your current skills and get into the sector that you want, which sounds like a very different sector than the UK, because you've got that backing from the government, which is amazing.
Yeah, I think maybe when I communicated, I overhyped it. I don't think it's I don't know if it's like backed by the government. I think like it's going. So for example, there's a lot of. I think, or I also think that the housing market should go down, because it's the prices right now are very inflated. But for example, in Romania, I think we have like loans. You can buy houses with 5% down, which is crazy. So I think they will continue to like even pump money or do these things in order for the economy not to crash. So I don't think they will get involved directly trying to take care of the construction companies, because I don't think they are that. Also, I don't know if they're that smart, to be honest. But I think they are going to this trend of it worked well for construction companies, I think is going to continue. It's not going to go down the whole the whole market. So yeah, that's something. And
Are
yeah,
you
thank you very much.
are you thinking of using, a very creative structure where you're just using a lot of deferred, or you're using equity?
Yeah.
Yeah. Because if you are considering using any sort of finance, it would be useful to have conversations with finance brokers now to see how easy it is to secure that in the industry. As I say, in the UK now it's not, so we're very reliant on doing creative deal structures in the construction industry.
Yeah, my plan is first I want to get one, or I don't know, maybe even more, a few industry experts, because I think also in the construction industries you have a lot of sub industries like verticals. So maybe I want to find someone who can advise on that, and then the next part would be like going out of financiers and see what I can leverage. So that would be the plan. I think I don't know, maybe also that what you said, but I'm trying to also organize my time because I don't have a lot of it.
Yeah.
But yeah, that's a great idea. I think.
You can use financiers for more than just raising the money. You can actually get them to help you value companies, but you can also help them. They will stop you from losing time as well, because when you first look at a deal and you've got the numbers, send it straight to the financier. It's in their best interest to help you, and just say, what can you do with that? And they'll go, nothing. Or actually, we could get 60%, or we could get you this amount of money. And that gives you your starting position to negotiate with the seller. So you can actually use them as a really integral, important part of your deal team, and they'll do a lot of the work for you.
When you say about that, about financier, what institutions do you think about? Let's say on construction, maybe.
Yeah, so I'd imagine, so you have tier 1 lenders that are the banks, tier 2 and tier 3 lenders. Tier 3 lenders are the ones that are a little bit more creative. So they'll be sort of peer-to-peer loans, or they'll be the ones that have acquisition finance. And with tier 1 lenders like the banks, it's very black or white. You'll go and say, can I borrow this? They punch things into the computer and they say no. The tier 3 lenders have far more creativity, and they actually buy into you. So they buy into you as an entrepreneur, as a business owner. So they'll buy into your story. So it's really important that you're developing these relationships with the brokers, with the accountants, with the lawyers, because they're going to buy into your story. So, you talked about legacy, saving people's jobs, saving that part of the industry. That is what will make a tier 3 lender go, yeah, we want to back you. Whereas if you just go and say, I just want to make loads of money, and these businesses are easy because the guys are old, of course, you're not going to get as much backing. So the tier 3 lenders are where you'll probably find them, and they're the ones that will help you do your due diligence. They'll help you with the valuation. And that gives you a lot of ammunition for when you're going for your meetings for negotiating with the seller.
Thank you very much, Ross. I really appreciate it.
No problem.
Awesome. Okay, next we have Tony. Go ahead, Tony.
Hey, Ross and Michael. Good to reconnect with you guys. And I apologize in advance if you already addressed these couple of questions I have. So sometime in April, I'm going to start working on building my list of companies I'm interested in acquiring, specifically dietary supplement companies that are direct response driven. And as far as my ideal buy box, these companies would need to generate somewhere between 1 and 5 million in annual revenues. So I was just wondering, so to keep maybe I'm not using the right word here, but to keep overwhelm down to a minimum, what have you found to be the best low-cost tools or low-cost AI tools that I could use, fewer the better, to help me identify companies that are doing 1 to 5 million annual revenues, The resource tool will provide me with a number of employees, how long they've been in business, the owner's home address if possible, email address, and any other contact info. So this way, when I do a direct mail campaign, because copywriting is my number one skill set, and I do plan to send out a letter. What have you found to be the best low-cost tools to aggregate all this information without using something costly like Zoom Info, as an example?
So we outsource to some VAs that help. We haven't found one particular piece of software that will do everything. But so here in the UK, I use a system called Credit Safe. Credit Safe, you can see the company's financial information. You can see the business owner's home address quite often. So we use, an outsourced service that will use Credit Safe to look at the financial information. We then use Sales Navigator, which I mentioned earlier on LinkedIn, and that plugs into an AI tool called Apollo AI. So between Apollo AI and LinkedIn Sales Navigator, you can pretty much find out anyone's contact details that you would need to. And then we'd reach out to them. Again, that's outsourced, so we use VAs for that. And then I only get involved, or the team only gets involved once we're at the stage, where we know someone wants to talk. So that keeps, all of the admin out of the way. One of my very first mentors, actually, 10 years ago now, he said, in business, you have £10 tasks, £100 tasks, and £1,000 tasks, regardless of the business. And as soon as you're able, you want to outsource the £10 tasks and move to the 100 and 1,000. And then when you're able, employ someone to outsource the £100 tasks. And deal making is all £1,000 tasks. You're talking to business owners that you want to buy, merge with, or sell. You're talking to future people that are going to buy your business. You're talking to accountants, lawyers, corporate finance houses, investors. You're talking to private equity houses. These really high-level conversations, which if it happens, it's often life-changing. It's a £1,000 task. So I would say outsource as much as possible, reduce your overwhelm, and just get involved when you're working on the bigger ticket items.
Thank you. I totally agree with what you're saying, because initially I kind of just want to learn the lead generation process, but as you said, I want to be able to eliminate the $10 task and start working with some college students who are part of my family, and hire them to do that kind of, for lack of better words, the grunt work, right?
Yeah, absolutely.
So this way I'm just focusing on having conversations. So I'll definitely look into Apollo and LinkedIn Sales Navigator to aggregate the information. I was just wondering, with Credit Safe, do they also provide intel on US companies or only European companies?
They do have US companies as well. Yeah.
Oh, they do.
I haven't got that bit switched on because we don't need it, but you can get data from all over the world. But Credit Safe is just one of a few that are available in the UK. Other deal makers and business owners here have preferences and use other ones. There will be something similar where you are as well.
Okay. And lastly, if I come across a company where, I've interviewed the owner, I've checked out the financials, and yet, the deal's not really a perfect fit for me, and I would like to go ahead and flip it to someone who's in my network, flip the deal, what's a reasonable fee to request?
So a little bit similar to the question earlier from Anthony, I think it was, what can you do there? So you could realistically, you could say, I've got this amazing deal. I've spoke to the owner, I've teed it up, he's ready to go, but it's not right for me. Can we do it together? And is there an equity share? I would say in that situation, your equity would be low because you've found it, done some rapport building, but you're going to have nothing to do with it. They're taking all the risk. So I would say if they offered you 5% or 10% would be amazing. Or you could say, well, is there a deal fee? And again, you know, commonly in the UK and I think in the US, deal fees in corporate finance range from sort of 1 to 3%, depending on the deal. So I'd typically be looking at that sort of range.
So if the owner wasn't open to a deal fee, but you mentioned something like an equity share, like get a percentage of the distribution for a certain period of time.
Yeah, so I mean, so if you come across, let's say you found a manufacturing company, you know, because you thought they manufactured supplements, but they don't. They manufacture toilet seats, and somehow it got into your deal flow, you know. So you have the conversation because they've said they're open to it. So you have a conversation. You go, do you know what? This isn't quite right for us. Well, that's when it's perfect to reach out to the community, you know, in this WhatsApp group or in your wider network and say, I found a fantastic deal. They manufacture toilet seats. I don't know anything about that. Does it fit with someone else? And someone will go, do you know what? We're a plumber, you know, or we're an electrical contractor, or we have bathroom supplies. So that's perfect. And you go say, great. What can we negotiate so everybody wins? And they'll go, what do you want? And you say, well, you know, maybe some equity. And if they pull a funny face, go, okay, what about a deal fee? And then you can negotiate from there. So I would say it puts you in a strong position, but I would try not to be one of those people that go, I found a deal, you're going to finance it, fund it, run it, and I want 50%, because that's not fair.
Got it.
Did that,
all right.
Did that help?
Absolutely, and thank you. I appreciate it.
No problem.
Awesome. Thanks, Tony. Do we have anyone else? We're going to end the call at the top of the hour, but if we don't have any more questions, we'll end it early. So,
Yeah.
oh, go ahead, Paul. Yeah, I see you.
Yeah. Sorry, guys. Anthony again. I just wanted to ask.
Sorry, Anthony. Sorry. Can we have Paul go first since he hasn't?
Oh, sorry, my bad.
Thanks. No, all good. I was just calling him out.
Okay, thanks, Ross. I just want to find out what your views are on agglomeration as opposed to roll-ups, as both can be taken to IPO status. What are your views?
So the theory behind it, I like this idea of distributing the wealth. I don't think the concept has been around long enough to prove that it works. So I haven't done anything on the agglomeration yet. I could probably keep my eye on it for probably, you know, another 5 years, 10 years and see what happens. My sort of cautious, I'd say, approach.
Thank you. I'll just go for a roll-up then.
Yeah.
LBO state, LBO.
Exactly. You know, I like to be, you know, in a level of control as well. So if it's a roll up, you know, everything is within your own destiny. In the agglomeration, you know, where you join with many other companies, there's a lot of moving parts. You've got, you know, a diverse portfolio where they don't always necessarily complement one another. Whereas in a roll up, you know, if you're just buying, you know, toilet seat manufacturers, like we said before, you know, and then you go and do a roll up of all of the other bathroom supplies and kitchen supplies, and yeah, I prefer that. It's a little bit more traditional. It's a little bit more guaranteed, I think.
Yeah. Okay. Thank you.
Thanks, Paul. And Anthony, if you'd like to jump back in.
Yeah, thank you. I just wanted to get my head around the difference between deal fee and the equity, which you made mention to of Anthony. Is the deal fee when you find the company and refer it over to another acquisition entrepreneur, and that's what you get paid on solely. And with regards to equity, do you get equity from the sale of the business or throughout the duration while that business is running under that acquisition entrepreneur?
Well, if you had equity in the company that was sold, obviously that equity would disappear. You could do that. I mean, that would be a little like a WIBO, I guess. You could say to someone, if I sell your company for you, if I find a buyer, will you give me equity in the company? There'd be nothing wrong with that. A deal fee would be, let's say you find an absolutely amazing healthcare company and you come to me and say, hey, Ross, I found this brilliant company. It's based in wherever, Nebraska. Are you interested? And I say, yeah, that's perfect. You know, it's off market. It's a fantastic, profitable company. It's got consistency of profits, amazing second tier management. I'm definitely interested in that. And then we'd negotiate your deal fee, which would be a percentage of the valuation that we bought it at. So as I say, generally the higher the number, so if you go up into the millions, the percentage goes down. So if we bought it for 10 million, you might get 1% or 2% of that deal. So that would be a deal fee.
Okay. So, and would you then have criteria that we would need to meet if I'm sourcing these deals for you on your behalf, generally, for members and stuff, etc.?
Yeah, I mean, all of us on this call, you know, will have criteria. Tony called it, you know, his buy box, which is really good terminology. You know, that's your perfect fit for a business. So I think Tony, yours was, you know, 1 to 5 million in revenues, supplement supplier or manufacturer. It also in your buy box might be you want the directors there to be less than 3. It's more complicated if you have many shareholders, and they're going to be, you know, all of them older than 57, which is the average age of retirement. So you put together what you're looking for, and then if you went and found it for me or for anybody else, you'd say, right, I've got your perfect business. What can we do? You know, and you could negotiate maybe a small piece of equity, or it might be the deal fee. And then when the deal gets over the line, that would obviously kick in.
Okay, thank you. And my last question is, would you have an Excel sheet with everybody's information with regards to the sort of businesses they're looking for anyway, as part of this membership?
For me personally, or for everybody?
For this group, yeah. And yeah.
I don't know, Michael, is that possible? You're on mute.
I think the best way to handle something like that is, you know, network in the WhatsApp group that we have for the attendees. So, you know, if you want to connect with people, go ahead and do that. If you're watching this video now on YouTube, recorded after we've already done this live, joining the summit, you get, you know, the recordings included. You get the virtual networking. You get access to a WhatsApp group as well. So everyone here, I think most people here are inside the WhatsApp group already. So go ahead and reach out to people there, and that's a great way to connect and find, you know, just start creating those partnerships and getting that information.
Okay, thank you very much.
And if anyone's listening as well is on the call, and you do have a perfect buy box, what are you looking for? Feel free to put that into the WhatsApp group now, so Anthony can start looking at that when he's out doing his deal sourcing.
Yeah, absolutely. Well, awesome, guys. Thank you so much for joining us today. We're going to put this recording on YouTube, like I said, and really looking forward to the summit. Also, I know I mentioned in the WhatsApp group, but we're pre-recording Jeremy Harbor's session on Saturday. So if you have questions for Jeremy, put them in the WhatsApp group, and we'll do our best to pass them along when we record with him. And again, if you're watching this on YouTube and you haven't joined yet, that's another benefit of joining the summit, is you can submit your written questions to our expert speakers during the summit. So everybody, thanks for joining us. Ross, thanks again, and looking forward to seeing you guys next week.
Thanks, everyone.
Thanks a lot. Bye bye.
Take care.
See you guys.